Hi, this is Paul from globaltradingsoftware.com. So I did a trade yesterday and updated people on the Discord group, and the link for the Discord group is going to be in the description. So this was a range breakout trade using the expert range breakout indicator. Also on there was the bias depth, the manager, and also the guardian zones, because I did it on Ninja Trader. So on the screen right now you can see this is just me updating. I mean, I did another trade yesterday and two other trades yesterday on the Discord group, but this is the one we're talking about here, and I've got those screenshots bigger to go through in a minute. So I've got the entry on what we call a straddle with that particular one. I'm going to talk through that in a minute, and then adjusted the stop to risk free, and then the guardian zones printed a support zone right below my stop, so very safe position now, and then obviously it goes on to make about $5,300 profit. So just wanted to show you the Discord group there. So these are the images that I took as I was trading with the range breakout. I want to talk about that, and I'm going to show you live on the chart as well. So when the oil pit opens, so I'm trading copper futures is fantastic to trade with alongside oil and oil pit futures, oil pit opens and things. So at 9 a.m. EST, and I live in Dubai, so that's 5 p.m. We get the oil pit open, and there's no physical pit, it's just when lots more traders start to trade oil, start work, and lots more volatility. So what the software does, you see where it labels it oil here, and we define the range. It's in yellow, so that's what we call indecision. It's a neutral bias. So during that opening range, there is literally just as many buyers as there is sellers, and nobody really wants to push, no volume either way. So then we look for what we call a straddle trade at this point. So we look normally to put a long order on above the range and a short order on below. However, this zone here is a resistance zone from the guardian zones, which negates me putting the long. So I'm not going to go long into resistance. So in this case, because I had so much resistance just up above this opening range, the straddle strategy was cut in half. I only had the opportunity to go short. When we get the straddle form, the yellow range form, we look down, the bias depth heat map is red, yellow, green. So there's total indecision on 6 different time frames higher up than this 10-minute time frame, which is my confirmation really. Normally if I'm going to go short and that the bias is coloured in red for that opening range, I want all of them red. But this case, we're looking for a straddle type strategy in that there's total indecision and the bias is neutral, and we've got that backed up with a bias depth heat map, so that's good. So got in a trade a couple of ticks below the low of that, so we're basically looking. So you know, that's the opening range, 10, 20, 30. Within 40 minutes, it broke down to the downside, and we got taken into that order. This screenshot here is about $1,500 profit. I have 5 contracts on there, so I do share. Sometimes I only trade 1 contract and things like that for normal life, but this week's been heavy on multiple contracts because I wanted to get some trading in. So the next update I did was the fact that we were around about $2,000 profit now. And I made it risk free, so I adjusted the stop from above the range to just below the entry. Why did I do this? First of all, I broke these 2 pivots here, okay, and I did it with high volume, higher than average volume, this little dot here with the manager, and it was a full candle. So this thing is picking up momentum. So to break out, we had a red candle. We had a cyan candle before it, which was a down candle but less volume. So then when we get a red candle, there's more volume than the previous candle, and the dot up above and below means it's average, yeah. But the next candle that takes us into the trade is red again, so that's got even more volume than the previous candle. So this momentum really picking up. we get a little indecision doji with less volume. We do then get a high volume rejection, so you just got to be patient and wait out. We do then get a little up candle but with less volume, and then we push down again, more volume, higher than average volume, momentum starting to go. Make it risk free. Next update, interestingly then, the automated Guardian zones on NinjaTrader, which puts in those multiple time frame support and resistance zones, actually recognized this as a support and resistance zone. So it printed that automatically, and my stop was just above it. Happy days, feel safe now that I've got the stop in the right position, because if that price action does come back up, it's going to test that as resistance now. It was support. So very, very simple. $2,500 at that point here. I've got a target down here of just over $5,000. That was my target for this particular trade, because that's the sort of profit I wanted to take. And the amount of ticks for that to move was probably average for a big move for the day. So I didn't want to be greedy. Then the next one, we come in and we're about $5,300 there, very close to my target, very, very close. So I just flattened the trade. I was over the $5,000 target that I wanted to do. It's not worth hanging around with all the stress, because I'd left my trading stop all the way up there above that support and resistance zone there. So I got this momentum. You see, we get another little green candle there, but then we get big red, you know, we're talking big momentum. But now this candle, it's got less volume, it's running out of juice. The potential is it's going to pull back. I'm very, you know, I'm over the $5,000 profit mark. That's the time to take the profit. So again, on the chart now, we can see this is where I took my profit. Okay, this is my entry here on the chart. This little blue arrow is where I took the profit. Look what happened afterwards. Okay, the manager helps you identify these sort of things. So, you know, we got that momentum coming down, then it ran out of juice. We got what we call a bullish army there, so but with low volume, and then went sideways. Because when we get those big impulse moves, they don't last all day. Yeah, and don't forget it was FOMC minutes yesterday, so we needed to get in. That was a 2-hour trade, and that's all we needed to do. The volume starts to drop off then, especially leading into FOMC. And as you can see, it came back down to test that same zone again. So the Guardian zones identify that as now support. So it prints this 30-minute zone here, comes back up to test where we had that trailing stop before as resistance. Again, Guardian zone, very powerful. Comes back down to test that again for the European Open. Now, with the European Open, what we've got here is we had data just after the European Gold Pit Open here. So you can see the European Open bias, it's red. So you would look for the short, but you can't look for the short because we're going into support. However, we play the data reversal here. So we look for the long, wait for the data to come out, and then it rips up back to that resistance zone. So that was another trade. I missed that today. I was playing golf. And that's you know, that's part of life. But again, I just wanted to go through this strategy. The range breakout is phenomenal. It's at set times of the day. You can actually program your day around these opens. So this strategy is great, and you know when the oil pit open, you know when the gold pit open is, you know when the European Open is. You know, these things and these ranges are formed when there's then we define that range, we give it a bias, we then use the bias depth heat map for that confirmation, and then we use the manager to manage the trade. And in reality here, when we see the manager, it starts to pull back. When it turns green at this point here, that's when you take your profit pretty close to where I took my profit now in the first case. So there was no, you know, I made a tiny little bit more, but that's my, I got to where I wanted to be, and that was my profit there. And then with the Guardian zones on NinjaTrader only, these are automated zones of decision points from institutional traders. So I take the 60-minute off, they disappear. I take the 30-minute off, they disappear. Put the 30 and the 60 back on. You can see we've got some really strong resistance up here. This is going to struggle to push. And this allows us to get those confirmations, allows us to trade, manage the trades and everything like that. So I'm going to put all the links down below in the description here. This was a trade. It was a trade. I shared it on the Discord group, and I'm using the software and the strategies that are my strategies, but those softwares make them a lot simpler to trade. So check out those links below. Another great trading day for me yesterday. To be honest, I'm not going to trade for the rest of the week now. Might get one in today, but other than that, I think I had a great week. Had a good 3 or 4 trades yesterday using different strategies, and you know, blew it out of the park. So there's pointless trying to do too much, otherwise I'll give something away. Hopefully that helps, which you will really see.